Good evening, everyone, and welcome to our market wrap-up. Today's U.S. stock market presented a rather divided picture. The Dow Jones Industrial Average was the strongest performer, closing up 0.45% at 51,307.79 points. The S&P 500 saw a modest gain of 0.13%, finishing at 7,609.78. Meanwhile, the Nasdaq Composite barely moved, up just 0.03% to 27,093.90. The VIX Volatility Index dropped 1.74% to 15.77, indicating that overall market risk appetite hasn't collapsed, but there's been a significant structural shift in capital flows. From a capital flow perspective, today's market was characterized by a divided yet oscillating strong trend. The primary driver was a rotation of funds away from high-valuation tech leaders and crypto-related stocks, moving instead into cyclical value sectors, particularly energy. The robust performance of crude oil provided strong sentiment support. West Texas Intermediate, or WTI crude, surged 2.69% to $93.91, nearing the $94 mark, while Brent crude broke above $96. Conversely, Bitcoin tumbled 7% to $66,407.99, and related crypto stocks like MSTR plunged 8.79%, with IBIT falling 5.84%, all exerting heavy pressure on the Nasdaq. Looking at the global market trajectory, the Asian session started optimistically. China's A-share indices collectively rose, with the Chi-Next index leading the charge with a 2.66% gain, driven by tech and new energy sectors. Japan's Nikkei 225 was up 0.8%, and South Korea's Kospi gained 0.5%. European markets largely mirrored Asia's positive sentiment, with Germany's DAX up 0.6% and the UK's FTSE 100 rising 0.3%, with energy stocks particularly strong due to rising oil prices. However, a significant turning point occurred after the US market opened. Despite strong pre-market futures, with Nasdaq futures up 1.21%, the actual cash market saw a substantial narrowing of gains by the close. Funds, upon the official U.S. market opening, opted to sell off large-cap tech leaders and instead bought into energy and cyclical value stocks. This resulted in a strong on the outside, weak on the inside characteristic for the U.S. market, meaning optimistic pre-market expectations gave way to structural selling during the session. Today's market also saw the U.S. dollar index DXY edge up 0.04% to 99.22, while spot gold fell 0.23% to $4,518. These signals suggest that the market is more inclined to trade the soft landing plus commodity price hike narrative, rather than tightening liquidity or safe haven demand. This implies that the market largely overlooked some potential bearish factors. Overall, a new structural signal emerged today. Capital is shifting from high beta growth tech sectors to high elasticity commodity cyclical sectors. Energy stocks have shown strength for 2 consecutive days, indicating a likely formation of a new incremental capital mainline. Looking ahead to tomorrow, we anticipate a higher open for Asian markets, especially China's A-share cyclical and new energy sectors, driven by rising oil prices and the momentum from today's Chi-Next strength. However, the weak performance of U.S. tech stocks might put some pressure on A-share AI-related sectors. Tomorrow, a key focus will be on the U.S. May ISM manufacturing PMI data, with an expectation of 49.6. If the data slightly exceeds expectations and holds above 50, it will further reinforce the economic soft landing narrative, solidifying the strength of cyclical value sectors and energy stocks. Conversely, an unexpected deterioration in the data could dampen risk appetite, leading to funds flowing back into bonds or safe haven assets. From a trading strategy perspective, we lean towards a controlled long position, primarily targeting oil and energy stocks, as well as energy-related industrial equipment stocks like ASML and Applied Materials. We advise investors to avoid pure AI software and crypto-related stocks. If WTI crude continues to rise above $94 in tomorrow's Asian morning session, and A-share new energy or energy sectors open with a gain of less than 1%, it might be an opportune moment to consider buying related ETFs on dips. However, if WTI crude unexpectedly falls below $92, or if the ISM PMI data is significantly worse than expected, it would be prudent to remain on the sidelines. In summary, our market judgment for tomorrow is a 40% chance of an uptrend, 35% for consolidation, and 25% for a downtrend. Please exercise caution.